In this week's market update, the euro hits a new 8-year high and investors rush to safe havens amid a renewal of geopolitical tensions. Many were hoping that this year's Jackson Hole Symposium, held as per tradition on the final weekend in August, would provide some insights on important policy issues facing central banks. Instead, both headline speakers, Fed Chair Janet Yellen and ECB President Mario Draghi, avoided them, opting to tell politicians about the importance of financial regulation and free trade instead. Both Yellen and Draghi defended the rules adopted in response to the financial crisis, but offered very few clues on the future direction of monetary policy. Earlier in the summer, Draghi had hinted that the ECB would begin paring back monetary policy, and investors interpreted the lack of new information from the central bank head at Jackson Hole as a sign that interest rates in Europe are set to gradually increase. Global investors like to chase higher interest rates and as such tend to buy the country's currency when it looks like rates in that country are going to rise. Now, Draghi's failure to talk down the euro saw the single currency hit its highest level against the dollar since January 2015. Meanwhile, the US dollar has fallen almost 10% this year against other major currencies. Of course, this has helped US stocks given that many of these large multinationals that make up the US stock market derive a significant chunk of their revenue overseas. Dollar weakness has been further fueled by chaos in the White House over the summer, with investor fears building that arguments about extending US government borrowing limits, known as the debt ceiling, could lead to a spike in volatility. Staying with currencies, on Tuesday the euro struck a new 8-year high against the pound, as investors show their unease with the pound's prospects most clearly against the euro. The pound bought as little as €1.07, the lowest since October 2009, barring of course the flash crash which lasted just a few minutes last autumn. The euro has risen steadily over the past year against most major currencies, to levels not seen since September 2014, thanks to the Eurozone economy improving and political risks dissipating. Sterling, meanwhile, is being weighed down by weak growth figures and moderating inflation, which have lowered expectations of a rate rise this year from the Bank of England. Meanwhile, sluggish progress in the Brexit negotiations have offered little reason to buy the pound. Despite signs that members of the UK government are moving towards a softer Brexit that prioritises safeguarding the economy, sterling hasn't drawn any support from that development. On Monday, the third round of Brexit negotiations got off to a very shaky start, with Brussels calling on the UK to start negotiating seriously and unambiguously set out its positions on leaving the EU. Michel Barnier, the EU's chief negotiator, voiced concern that London was wasting time by refusing to engage on separation issues such as a financial settlement. His counterpart, David Davis, the UK's Brexit secretary, in turn rejected the suggestion that Britain was holding back, as he called for more flexibility and imagination in the EU's approach. The exchange was dubbed as a reflection of the very low expectations of progress in this round of talks, and growing concerns on the EU side that Britain is underestimating what concessions are needed to move on to trade discussions in October. Uncertainty over Britain's future relationship with the EU also cast a shadow over Theresa May's plans to discuss a UK-Japan version of the deal Tokyo agreed in principle with the EU last month when she meets her Japanese counterpart Shinzo Abe. But for now, Brexit concerns pale into insignificance as Japan deals with a far bigger worry. Early on Tuesday morning, North Korea launched a ballistic missile that flew over Japan, escalating an already tense military standoff in the region with an aggressive step it has not taken in almost 20 years. The Japanese government issued an alert for people in parts of Hokkaido, its second largest island, to take cover, putting residents on alarm and prompting an angry rebuke from Prime Minister Abe. The news rattled investors and saw a rush into safe haven assets, with gold rising to its highest level since the US presidential election. The yen also rose while the US dollar fell to its lowest level in 18 months. Assets across developed markets sold off as investors feared an increased risk of escalation in the ongoing North Korean crisis. The FTSE 100 hit a 16-week low, with financials the biggest fallers. The S&P 500 fell as much as 0.66% after US President Donald Trump warned that all options are on the table for the US to respond following North Korea's new show of force. However, indices did end the day higher thanks to a rise in the largest tech stocks, with Apple, Alphabet, Microsoft, Facebook and Amazon all ending the day higher. Staying with Amazon, shares in the UK's major supermarkets had a wobble on Tuesday after the online retailer completed its takeover of Whole Foods, immediately slashing the prices of several common groceries in stores. Worries over Amazon's discounting power gave investors the jitters as the London Stock Exchange opened for the first time after the bank holiday weekend. We saw shares in Sainsbury's down 2.29%, while Tesco fell 1.82%, but it was Morrison's which took the worst beating, closing down 3.7%. The oil price has moved higher as Hurricane Harvey moves towards the southern Texas coast, shutting down more than 16% of the US oil refining capacity as rain and flooding battered Texas. Now, more closures are expected to take place in the coming days, with possible implications for the oil price. On Friday, investors will be closely watching the latest US monthly jobs figures for some indication of whether inflation is picking up in the world's largest economy. The relative lack of inflation in developed economies since the financial crisis is a major concern for central banks as they try to remove monetary stimulus. The US jobs market has shown continued strength, finally closing its post-recession jobs gap. However, the subdued pace of wage growth is acting as a drag on inflation, an unwelcome complication for the US Federal Reserve in deciding the timing of its next interest rate rise. As the FTSE 100 gears up for its quarterly reshuffle of winners and losers, Provident Financial faces relegation after a massive share price fall saw almost £1.4 billion wiped off the firm's market capitalisation over just 5 days. Provident Financial is a core holding in both the Woodford Equity Income Fund and the Woodford Income Focus Fund. Star Fund manager Neil Woodford, who manages these funds, has seen a run of companies suffer falls over the summer, with names like AA Group, AstraZeneca, Imperial Tobacco and Allied Mines all suffering share price plunges. Finally, Uber has a new CEO. Dara Khosrowshahi, previously chief executive of Expedia, will address the company for the first time on Wednesday, at a time when executives and shareholders hope he can unify a fractured board and set the troubled transport company on a fresh course.